Hi, and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
All our like subscriber. Okay, Linda has one stock here, 6181. Yeah, sure, I can do that. A very good morning to all of you. Have a good week. Those of you who've been following my closing bell last week, I did say that we are seeing first of the many sign of strength, right, in the background, and on a weekly basis, we even have a spring. So that looks like we have reached a temporary bottom from the market standpoint. But then again, more of the update this evening. For those of you who is a premium members as well as the like members, you are encouraged to join this month as premium members as we are turning 5 years old. Okay, so that's a good thing. We've been around for 5 years. Time has taken a lot. Okay, but let's go on with our normal program. This is the Friday chart clinic for the 6th of September 2013. Time passes by very quick, and our website traderstreet.com has turned 5 years old. It's already a 5-year-old boy. And you come to think of it, my youngest daughter is 7 years old, and the website is already 5 years old, and we are still going strong. In providing quality education and information. So this September is when we started this website, Traders Truth Review, back in 2008, and it's September 2003. So if we turn 5 years old, I think if I have a cake, we'll probably cut a cake today. But let's move on with the exciting. So the good thing is we are still going strong, and we will continue to provide a benefit to our graduates, our clients, as well as new members who's coming in to discover what we have to offer. And in return, I think over the years, many of our clients has benefited from our education as well as also their own portfolio. As such, as usual, in the month of September, we are giving a 10% discount for the Traders Truth Review Premium membership for new sign up only for the whole month of September. So take this opportunity to sign up either for a year or for 3 months to just test us out and also support us for all these years. So we will continue to grow stronger and able to fund our so-called back-end course, which is starting up the website and having it made it available to you. So support us for that one. Okay, the second announcement that I have is our Master the Market Foundation course will be on September 30th. Bill, take a note. Our Master the Market Foundation course will be on this end of this month, September 30th. So we are starting to promote it now, as that registration are now open. For those of you who is our graduate, you can re-attend back this. Just bring all your old notes, and probably they won't be charged. If do, they probably just be for the lunch. So that's one of the benefit for being one of our graduates. And one of the emphasis that we do is the training software. Meta stocks will be provided to you plus the annual data. So that's one of the benefit. For those of you who is staying outside of Klang Valley, thinking of coming for this foundation, which is a basic course, think about it. It will be held on September 30th on the Monday and Tuesday of a trading day. So we're able to show you how the market works. Okay. And aside that, also we having our, okay, we got another one, Hua Yang, okay. And another announcement is that tomorrow we'll be doing our investor club meeting, all right, at our office in Jupiter, okay, in Jalan Raja Cholan at level 9. Okay, for those of you who is staying in Klang Valley, and if you have time, we will be doing a market outlook. Bill will probably be updating what's happening in US and Syria, a little bit on gold, and myself, I prepared a short presentation about investing and trading, which is quite different from our Friday chart clinic format because it tend to be longer at our club meeting, and also we are able to talk to you and speak to you. So if you do come tomorrow, which is having it here at 9:30, we start at 9:30 to just short of 12 noon, okay, and just say hello to me and Bill for that matter. And a lot of time we do our Friday chart over the webinar. We hardly see face to face. It's good also to know, the people we touch in our lives, and hopefully they would benefit too. Okay, next thing I will talk about is the September 2003 stock market comment. Looking for a safe harbor, which is currently posting, is available on our Traders Group Review website. But before that, I want to pass you to our regional correspondent, Bill Vermine, to give you an update. And if you have any stocks you want me to look at, just give it to me. Currently, I have about 3 stocks. You can see it from your screen, which is 6181, Asiata, and Huayang. All right. Okay, pass it on, Bill. Here you go. Yeah, Bill's gonna finish his coffee first. And so this is the a lot of things is going on, and we are doing this to get everybody in the right footing. Right?
Hey, good morning, everybody. Bill here, and I'd like to report a few things that may affect our investments. First, there's been a tremendous negative sentiment towards Asian stocks, and that would include all of Asia, even China. And presently, and this is according to Money Week magazine, the 23rd August edition that just came out. I got it in the mail yesterday, and they report in the fund section that Merrill Lynch, Citibank, Goldman Sachs, all of the major funds in the U.S. have been negative on Asian markets. So this has caused a herd panic in selling in the Asia market ETF funds in the U.S. Well, he reports a few facts here in the magazine. And one, it was reported that despite all of the incredible negative sentiment, the Norwegian government pension fund, which is the largest pension fund in the world, they sit on 760 billions in accumulated wealth. They have been raising their exposure to Asian equities. They've raised their China exposure. They've raised their Thailand, their Malaysia, their Indonesian, and their Indian exposure. Um, and surprisingly, the single largest holding across their equity portfolio was in the food giant Nestle. So, why are they enthusiastic in emerging markets, whereas almost everyone else is universally bearish? Well, I would say that um, for those who look at the longer term and look at growth and look at free markets versus socialism in the U.S. and socialism in Europe, that Asia is still the place to be positioned. And remember, Asia is one half of the world economy. So, in any case, the article goes on to say that smart money is beginning to come into Asia again. And some of the funds that are moving in are Aberdeen Asset Management. They're recommending large cap dividend shares. Who else? The JP Morgan Global Emerging Markets Equity Income Trust, Henderson Far East Income Trust, Schroeder's Oriental Income Trust. They have all been buying, and all have delivered a reasonable return in the last month. But we don't look at 1 month, we look at a longer term, at least 12 months. So my point is that anytime markets reach extreme levels of pessimism and gloom and bad news, that is when they turn. And gold is an example. The whole world was universally bearish on gold when gold was around 1180 to 1200 an ounce. And despite that, gold has had a very strong rebound, and it continues to be very well supported. So that's my point. And as far as the Malaysian market is concerned, if we follow the strategy of Aberdeen Asset Management, high quality dividend producing shares, we'll be fine. But it will take time, and it'll be very scary, because remember that the purpose of markets is to separate the money from those who are uninformed and transfer it over to the smart money. That is the whole function of markets. And I'll give you one example. There's a share in America called Newmont Mining. They are a premier gold producer. They have cash on the balance sheet. They make consistent earnings. However, the share is now trading at lower than the liquidation value, lower than the cash on the balance sheet. Now, this is absurd because this is a growing company, and if you bought the share, you're basically getting the company for free because the cash on the balance sheet is what the share is trading at. And based on historical valuations for Newmont, this is the lowest it's been in 100 years. Um, so, should sentiment turn, that would be a really great investment. So don't give up on your gold shares. Don't give up on gold. Don't give up on emerging markets because we've hit, in my opinion, close to a bottom. Also, for those who are adventurous, China equities are really cheap and they're getting cheaper. So there's many opportunities there in terms, and I'm not really recommending this, but it's something that you should pay attention to because where China goes, the rest of Asia goes. And despite all of the negativity, the Chinese market is bottoming out. And professionals like the Norwegian government pension funds, they're heavily accumulating into quality China issues. And what's interesting, none of our local fund houses in Malaysia have been recommending China fund. But I would venture to say that many of their insiders and connected clients are buying China. And once China has a huge rally up, then they will launch the China funds again, so that the sheep can come in and buy cheap or buy at the high, and those who bought at the cheap level will be able to offload at a high price, and that's how markets work. So take advantage of sentiment. It's an opportunity. And with that, I wish you a great week. I hope to see you tomorrow at our Traders Club meeting or Investors Club meeting, and I will talk more about this subject that I just talked about. Bye.
All right, thanks a lot, Bill. So that was Bill on it, and just okay. We got another one in here. Hannah want me to look at KLCC property. Okay. Now I'm just going to touch on quickly for my. You can read all this on my Traders Truth Review report here, which I do have here for the September month. It's not that long, but it's not that short too for the September stock market comment. But I just want to say that to answer one question, you can read all about it, and perhaps I'll touch more about this tomorrow. And what I want to talk about is a lot of people is saying that the sell-off that we see in the KLSE now, it's a reminiscence of the second financial Asian crisis that we have back in 97, 98. Now, this is the whole topic of it is what I'm talking about. Is this a repeat of the second financial crisis back in 97, 98? Now, I want to reiterate that it is not, and this is just a case